please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Very good morning. Welcome to Chartbusters. Well, it's green on the screen. The Asian markets holding well in the green. Well, the Nifty as well was participating. Unfortunately, we've come off a tad bit from the high point of the day, but the Nifty is still flirting with the 200 DMA. Hey, Mangalam, good morning.
Hi, Nigel. Flirting with a 200-day moving average of what, 10175. That is a mark we'll keep an eye out on. But what I like is the fact that the mid-cap index is outperforming. A 1 day ahead of expiry. The advanced decline ratio, 4 stocks in the green for 1 in the red, indicating that maybe a lot of the smart money believes that the downside for now at least is protected. But first up, all the top stories that we're tracking at this point in time. Bond yields, they ease as the government cuts borrowing for the first half of the next fiscal. The rally in bonds boosts NBFCs, but banking stocks cool off from the high point of the day, still outperforming.
And a relief rally is underway in metal stocks as trade war concerns between US as well as China ease. Vedanta and Tata Steel, they're among the top gainers on the Nifty.
A slew of US FDA nods boost Wockhardt and Aurobindo Pharma in trade. Wockhardt Bio AG gets a US FDA nod for oxycillin sodium injectable, while Aurobindo gets a tentative US FDA nod for an HIV infection capsule.
And a whole host of stocks are buzzing on the back of order wins. Punch Lloyd bags an EPC order worth more than 500 crores. We have KNR Construction receiving 2 hybrid annuity model projects from NHAI. And Dilip Bilkon declared L1 bidder for 4 hybrid annuity model projects by NHAI.
Stellar debut for Bandhan Bank on the bourses, lists at 487 rupees per share versus issue price of 375, settles 24% higher as we speak. All right, while we're flirting with the 200-day moving average on the Nifty, the mid-caps performing well. Let's see what the order of the day is. Ashwani Gujral now joins us. Good morning, Ashwani. The 200-day moving average on the Nifty Bank is lending some support. The mid-caps are outperforming. What does that mean?
See, the bears just tried to attack and they were able to take the Nifty lower by 40-50 points. But, the market has taken that attack fairly well. So, it looks like the bull side is the stronger side. Hence, this pullback should be bought. This is a bit of a runaway market because global cues remain positive. Chances are, as Europe opens, even more positivity comes back. So, since bears are in any case feeling weak, if you buy from here, even on the financials, it should be possible to make more money on the upside. Particularly, private banks are moving up very, very strongly. So I think Bank Nifty is getting good support from there. And even if PSU banks have come off a bit, I think there could be more rallies to happen still on that. So Kotak Mahindra is a buy with a stop of 1040, target of 1080. Axis Bank is a buy with a stop of 514, target of 540. And PNB Housing, almost after going through a bear market, has turned around fairly sharply. That's a buy with a stop of 1230, target of 1275.
Battle for Binani Cement continues between Dalmia Bharat as well as Ultratech Cement. The operational creditors, they have staked their claim of around 700 crore rupees, which supposedly is not included in the current offers. To discuss that and more, we're currently joined by Mr. Siddharth Tibrewal, the senior committee member of Binani operational creditors. Well, Siddharth, thanks so much, sir, for joining in today. If you could give us your sense, there's a battle on between Dalmia as well as Ultratech, but you seem to be unhappy with both. Why is that? What is the total claim you are making? And in fact, if you can tell us for how long, have these claims been outstanding? And also, what kind of action have you taken?
Thank you, Nigel, for giving us the opportunity. Total outstanding claims for operational creditors are 700 crores. As we understand, the total repayment by either Dalmia or Ultratech is 30% of those claims. Okay. And that is versus every bank being paid interest and penalty, including interest during the moratorium period. So that's when we are the only class being left out. The outstandings are there since roughly 1.5 years. So operational creditors, small MSMEs, have been waiting for money to come from Binani for almost a year and a half, and that's the reason for the unhappiness. So you're approached the NCLT with the intervention appeal.
So you're saying that they've offered about 210 crores, 30%, that is, right?
Yes.
That's right. All right. So Siddharth, if you could tell us what exactly is now the legal recourse? You have approached the NCLT, as you said, but what's the way ahead for this thing once the NCLT, say for instance, does not give you a satisfactory answer?
We feel the law has been misinterpreted by the RP and to some extent by the COC also. The law states that in case of liquidation, the bare minimum the operational creditors need to be paid is the waterfall ratio of the liquidating value. That's what the basis has been for the COC and the RP.
Can you explain
Binani
that to our viewers? Waterfall ratio.
One-of-a-kind case.
Can you explain that to us? Waterfall ratio of liquidity value. Can you explain it for our viewers?
Yeah, we've got 700 crores. You're saying they're willing to pay you 210 crores. So what exactly are you expecting?
We are the only class of creditors in the entire Binani episode who are who are looking at a haircut.
Okay.
To give you an example, Edelweiss is being paid 16% interest since the company went into NCLT.
Okay.
Every bank is being paid interest plus penalty, and we are the only class in the entire Binani episode who is taking a haircut.
Okay.
We feel that is unfair. Why are we being the only class being signaled out?
Siddharth, is this a case only with regards to Binani Cements, or are you aware of all the other cases which are stuck in the IBC right now having such problems with regards to the operational creditors as well?
No, Binani is a very unique case where they're realizing fantastic value, and that has been mainly due to operational creditors who have let the company be an ongoing concern. And even the results, when unexperienced people like the RP were running Binani Cement, they've seen fantastic growth and a profit of 20 crores in a quarter.
All right,
that is all due to our work and our support.
So Siddharth, you said that you have approached the NCLT. When is that case likely to be heard? If you could tell us that, is it today?
Yes, we have a hearing today. Total 14 petitions have been filed in the case of Binani Cement. We are the fourth one. 3 were heard on the 22nd.
Okay.
And our hearing is today.
Your hearing is today. Okay. And, what's the next recourse? I mean, if NCLT has admitted your claim at least?
Yes, we were the first in the tribunal's history whose claim was admitted. And we really hope for justice at NCLT. In case we are forced, NCLT is the next step, and then the Supreme Court.
Okay, all right, Siddharth, thanks so much for stopping by and in fact giving us all those details. We'll wait to hear from you in terms of what is the outcome from today's NCLT hearing that you're talking about. So Mangalam, this is a bit of a rare case. Why? Because in all the other cases, there is a haircut that's been taken.
Right.
That's why we can't really compare this case with other cases, because in other cases there's a bit of a haircut. Here, in fact, what we are aware of is that the lenders they are getting all their money. So the operational creditors, they are throwing their hat in there. They're saying even we should be paid. Now, let the law take its course. Let's see what the NCLT has to say with regard to this. But that it is 700 crores is what the outstanding operational creditors are saying that they have outstanding, and 210 crores is what they'll get. Interesting. Things really heating up on this.
Things really heating up, and a lot of things are. We need to find out what the law is, and these will also set some precedents for future cases going forward. In the meanwhile, just keep an eye on the markets. Apollo Tyres, that one has moved to the high point of the day. We have Biocon too, which has moved to the high point of the day. So the mid-caps, they are doing well. Individual mid-caps actually are spiking as we speak. But the government, they've released their borrowing program for H1 FY19, which is considerably less than what they borrowed in FY18. So to discuss the impact, we have S.K. Dubey, the MD of PNB Guilds, and Lakshmi Narasimhan, the Executive Director of Shriram City Union Finance, joining us on the phone line. Thanks a lot, gentlemen, for joining us. First up, if I can come to PNB Guilds, because majority of their revenues, they come only from the bond portfolio, the bond coupons, as well as capital gains. So, Mr. Dubey, if you could tell us what exactly is your total portfolio duration right now? How much of that is available for sale? How much of that is held for trade? What does this mean for the company as the bond yields have fallen to about 7.35 from 7.62 yesterday?
Yeah, actually, because of the very difficult situation which prevailed before yesterday's calendar, we were not with a very heavy portfolio, and our duration is, around 3.
Around?
So, 3. Because we have not carried a very huge portfolio in view of the fact that the bond yields were very high.
All right.
And we were not in a position to take a very big call during the year end.
Okay, all right. Mr. Mr. Dubey, let's give us simple details. What is the total book size? If you could tell us how much of it is HTM and how much of it is available for sale.
No, book size. See, I'll tell you, our HTM is equivalent to our net owned funds.
Okay.
So it is in the range of, around 900 crores, a little less than 900 crores. That's the standard position. But the portfolio keeps changing, and portfolio is something that, you get to know year end. But we are not carrying a huge portfolio, and we are carrying a very low duration.
What is the size of the portfolio? You said held till
maturity. So it should be in the range of, around 4,000 to 4,500. But all of this is a low duration portfolio.
How much of that is available for sale, sir?
Entire minus 900. That's what I said.
Okay. All right.
Yeah.
All right. Hang in there. We'll come back to you, Mr. Dubey. But we also have Mr. Lakshmi Narasimhan waiting by. He's from Shriram City Union Finance. Mr. Narasimhan, if you could tell us what exactly is your current borrowing cost, how much of that is fixed, how much of that is floating, and because of the lower yields, does that change your cost of borrowing? How much does that change it by?
Yeah, so as we kind of speak, my Q3 end weighted cost of borrowing was 9.1%, while the marginal for Q3 was about 7.75%, but that's a function of the underlying mix in terms of tenors. So this 9.1% converts into 50% of my borrowing being fixed, and the balance 50% broken up equally into repricing at the end of 1 year each of those tenors that for which it was borrowed, another 25% which is completely variable. We just concluded a deal of about 500 crores in the last 10 days, and there we picked up it in terms of it was a 15 to 18 month money from different mutual funds in the market. There we picked it up at anything like 150 to 225 basis points over the MIBOR. So MIBOR was about 6.25 when we picked it up. So that's largely the borrowing that we did during this quarter.
Okay.
And how does that change your cost of funds? If you could tell us, will that impact your NIMs in the next quarter?
I think it doesn't shift the cost of fund dramatically because my weighted cost was 9.1 and the additional borrowing in any case is less than 8.1. So it doesn't shift the overall weighted cost of borrowing dramatically. The NIM should be maintained as we kind of head into the next financial year.
Okay.
And it's just that the incremental borrowing of about 2,500 crore is what we plan for the next financial year. And there the government's announcement yesterday of their program and then bringing in benchmarks for the 2 to 5 year maturities.
Okay.
I think that will kind of help a lot in terms of making our plans even more clearer to hit the bond market.
All right. Mr. Narasimhan, so the sense that you're giving us is that it doesn't really change the cost of borrowing for you. So let's focus on a couple of details, sir, before we let you go. Your gross NPAs in absolute terms, that's been rising over the last, last few quarters. If you could give us a sense in FY19, how do you expect things to shape up? If you could give us some kind of guidance.
I think the gross NPA largely is linked to the fact of NBFCs being directed to move to the 90-day past due basis of provisioning.
Okay.
NBFCs were at 180. In the last 3 years, we have moved from 180 to 90.
Right.
So as and when each bucket has moved 30 days downwards, the overall NPA has been tracking up anything between 150 to 200 basis points.
Right.
As of December 2017, we were at sub 9 in terms of the gross NPA.
Okay.
With the entire demonetization.
All right, I think we've snapped a line with Mr. Narasimhan. We'll try to reconnect with him, but the broader point is that there has not been really a big shift as far as his borrowing mix is concerned.
I think he's back with us.
He's back with us. Mr. Narasimhan, you were saying something with regards to demonetization. All right, I think we'll try to reconnect. But Mr. Dubey, before we let you go, Punjab National Bank, your parent company, has been facing a lot of the troubles with regards to the whole Nirav Modi scam. It's lost almost 15,000 crores in terms of its market cap. Do you think they are looking at selling the stake that they hold in PNB Gilts, perhaps to raise some capital? They hold about 480 crore worth stake in PNB Gilts. Do you think that is a possibility?
Not currently. But that possibility is always there. But may I just tell you that your scroll says my cost of fund is 9.1, which I have not mentioned. Our cost of fund is in the range of
the scroll was
NCBLO.
No. The scroll was for Shriram City Union Finance. We'll get that fixed. All right, we'll get that fixed. Apologies for that. But as of now, you suggest that there is a possibility that PNB may look at paring their stake in PNB Gilts, right?
Not currently, but that option has always been there, and the parent bank has been, mentioning to the market for the last 3 years that this option is always there.
Oh, there is a possibility. So maybe in FY19 we could see some movement, Mr. Dubey. It's the possibility was always there, but has there been some movement? That's what we are trying to ask you, Mr. Dubey.
No movement so far.
No movement as of yet, but there is a possibility, is what you're saying.
Yes.
Okay.
I don't know how much that moves the needle for PNB though, because they hold what, 74% stake in PNB Gilts, which is worth around 480 crores. Let's see how that goes about. It's a small amount, but let's see how that goes. Thank you, gentlemen, for joining us and giving us the whole roundup of what it means for these companies as far as the government's borrowing program is concerned and the yields that we've seen declining to 7.35 from 7.62. With that,
a couple of these pharma names. Oro Pharma has moved to the high point of the day. You have Sun Pharma as well that's moving quite well. So just pull up a couple of these names. They're doing pretty well. But, if you look at the broader markets, Mangalam, we look at the breadth of the market and say, well, things are looking so good. You were just talking about Apollo Tyres, how well that stock is doing. But you need to keep an eye out. Certain stocks, they're still getting a whack in an otherwise strong market. You have Balrampur Chini that's moved to the low point of the day. That stock's been getting an absolute whack in the last few days. You have Adani Enterprises as well. That one as well is seeing some selling pressure. So just keep an eye out. You can't really paint everything with the same brush. I think that's the message that we're getting as we speak. A few of these stocks, they are seeing some selling pressure. The Nifty, though, is still holding below that 200 DMA out mark.
Absolutely, Nigel. And a situation like this, what happens is it bodes well for the FMCG stocks. So take a look at Dabur. That one, for instance, has moved to the high point of the day. For the last few days, we've been seeing a stellar rally on Jubilant Foodworks. So FMCG pack really is where some sort of defensive action protection is being sought after or sought at. So we'll keep an eye out on this space. But as of now, the stock on our radar will be Fortis. We'll definitely keep getting you some more details. I believe that we have Nisha with us. Nisha will join us. Nisha, if you can take us through what exactly are you currently gathering?
All right, so sources with direct knowledge have shared with us that today the board meet is going to take place for Fortis Healthcare, where they are going to really deliberate on the offer made by Manipal Hospitals, which is backed by the private equity firm TPG. Remember, we've been reporting about it for a while now. We were the first one to say that TPG Manipal is back in the race, and we even went through the contours of this transaction just last week. So we do gather that today that deliberation could happen, and if everything goes well, the announcement is likely soon after today. Now, the structure really is the asset buyout, which would involve a long, convoluted process as well, which may require a demerger of the hospital business of Fortis Healthcare and also a stake sale of the diagnostic chain SRL. We gather that TPG Manipal, in order to avoid any legal risks coming in from the IG or else any liabilities coming out of the fund, alleged fund diversion on the promoters of Fortis Healthcare, have really taken course to this contour and this structure rather than merging whole of the listed company Fortis Healthcare with itself. Now, remember that the demerged business of Fortis Healthcare, which is essentially the hospital's business, could be a listed entity, and Manipal wants to be a pan-India hospital chain, which is going to be in the listed space with the diagnostic chain SRL. We do gather that TPG could be funding about over 4,000 odd crore rupees to Manipal for this transaction to be completed. So, waiting with bated breath for this announcement to really take place.
Okay, all right, Nisha, we'll keep an eye out on Fortis Healthcare. Separately, I think tomorrow's the last day, Mangalam, that it will be there in the derivatives market. So all the outstanding contracts, all the open interest will have to get closed out. tomorrow itself. Well, moving on then, higher taxation in hybrid vehicles post GST is turning out to be a cause of concern for car makers. So much so that Maruti is now deferring its plans to launch its first fully hybrid vehicle. Utkarsh has exclusive details on that particular story. Utkarsh.
Motown has been waiting for long when it comes to a tax cut on hybrid vehicles, and it was a matter of time before one of them rethinks their strategy. What we are picking up is that Maruti Suzuki has held the plan of its first fully hybrid vehicle, the S-Cross, which was codenamed YGB, and was supposed to be launched in 2019. The RFQs for the same vehicle was floated by the company and has been cancelled, is what we are picking up from multiple sources. Also, the current vehicles which have the micro-hybrid technology like the Ertiga, Ciaz, and also the current model of the S-Cross is also under the radar. Maruti will be relaunching the Ciaz and Ertiga with newer engines later this year and is still contemplating whether to continue the hybrid models in the same or not. The reasons are plain and simple. An increase in the taxes of hybrid vehicles has resulted in slump in sales. And what top management individuals in companies suggest us is that to make money in such high taxation on hybrid vehicles is not possible. But automakers, however, are still hopeful and have been raising concerns to the government, which till now has not resulted in anything concrete. Until then, you can expect more car makers to put their hybrid plans on the back burner. With that, it's back to you.
All right, Utkarsh, thanks a lot for that. But what is gaining right now are the NBFCs. In fact, extending its gain right now is Cholamandalam Investment. That one should come up for you, up about 4% at the high point of the day. Excited by the prospects of lower cost of borrowing, but as we heard from the management of Shriram City Union Finance, doesn't move the needle too much. So that's an important development. We'll keep an eye out on that. How much incremental credit growth comes by at the lower cost of funding? Does that result in higher NIMs? Or once that happens, and the company goes ahead and gives credit to people at lower cost, does that impact their asset quality?